Hello and welcome to our viewers on cruxinvestor.com and also to our listeners on Cruxcast, our podcast series. And for those of you new to Crux Investor, please click the button in the corner of the screen and subscribe to our YouTube channel. We're here today with Vincent Algar, the CEO of Australian Vanadium. We're going to be talking through, or get an update from him as to what he's been doing since we last spoke. If you want to check out the various topics we discuss in the conversation today, look in the description below and click on the relevant timestamp. Hello Vincent, how are you?
I'm going well, how are you?
Not too bad. We spoke recently.
We did, it feels like just yesterday.
But you were 12,000 miles away.
I was, and now I'm here.
Now you're here. What are you doing here?
I decided to come over to London to meet up with, make some introductory meetings to some funds with a corporate advisory company we're working with out of Singapore.
Right.
So yeah, just getting to meet people, following up from our one-to-one meetings.
Okay, interesting. And the purpose of that being what?
Twofold really. One, to open ourselves up to a new group of investors, primarily an institutional base, PE and family office base, but also to investigate coming here with a potential listing, probably which now looks like around March next year if it goes ahead in that time frame.
Okay, we should come back to that another time perhaps. Okay, for people who are new to your story, why don't you give us that 2-minute summary and then we'll pick up with some questions.
Right, Australian Vanadium is a company that's been listed for over 10 years. Our main focus is our project south of Meekatharra, which is in the central part of Western Australia. It's an active mining region and we're developing a project that'll be about 5% of global vanadium production out of a titanomagnetite deposit, very similar in style and geology to that being mined by Bushveld and by Algar.
Fantastic. Okay, that's a nice summary. So I want to start off and talk about junior miners first of all. So give us a rundown of the finances with regards to the company in terms of market cap, share price, etc. And then we can...
Right. Currently 1.7 billion shares on issue, which is a lot. The company's been around for 10 years. We know that that's what it is. We've got 6,700 shareholders, which is also quite a large number for a company of our size. Market cap currently around 29 to 30 million, depending on how it went this week. Had a good week, which is always good in the first part of the financial new year, if you like, in Australia. Sitting with about 4.5 in cash, working our way through and deep in the process of doing a pilot study as part of a feasibility.
That's right, and you mentioned that you're working towards the DFS as well.
Yes, that is definitely part of the DFS work.
Right.
Is to do that pilot, and I'll spend a bit of time in saying why that's important that we're doing that in that particular way.
Okay, so you've got 4.5 million left. That last takes you through till when?
Probably take us through to the end of the year on the way that we're going. We're a very small team focused both in our consulting team and internally, and they're focused really on getting that work done in the best possible time frame.
And are you seeing any pressure from retail investors, institutional investors in terms of managing that G&A a little bit further out, or that's what you need to get to and you're going to have to raise at the end of this year no matter what?
Look, I think everyone looks at the capital, they look at what needs to be done, and everyone will know that we have to do something to make sure that we keep on our timelines to get to the end. There's two ways to do this. We sit on our hands and go slow, and we know where that goes, so that it doesn't get the project done, or we get our hands, push our sleeves up and get on with the work, and that will require us to have the money we need to get it done, which is one of the reasons why I'm here as well.
Right.
To make sure we understand the capital markets around what we need going.
Because you used a phrase with me when we spoke, and we did this online but previously. You said the most dilutory form of so the thing that can affect dilution most is not being able to raise capital.
Absolutely. Yeah.
Is the business
running out of money is the worst form of dilution the shareholder can have.
Yeah.
It's a very relevant thing in a junior resource company, knowing what you're spending, how you're spending it. So being very tight on a budgetary level. Have a budget, which is often a thing quite anathema to some people. But knowing what your budget constraints are, knowing that you well ahead of time how you're going to be spending that money and where you're going to be where it's going to be going, what deliverables it's giving you.
Right, and so you're going to be raising how much, do you think? Have you got a sense of that yet?
Look, I think probably...
It's a long time between now and
then.
It
is a long time.
30 million market cap.
Absolutely. So
things may go well, they may not.
We could finish the work we need to do down to the end of a feed study with between $5 and $10 million.
Right.
So that's an additional amount of money that at some point we'll have to put in the bank.
Right.
And that's what we're working towards, to either saving our cash to get to that point and then putting that in. But we need to deliver some deliverables to add some value along the way.
Right, and what do your institutional shareholders think of of this process? They have.
We don't have a lot of institutional shareholders. We're one of the reasons I'm here again.
Okay.
We have on our register a couple of people in around 2.5 to 3% mark.
Right.
We have people that we may think are institutional shareholders sitting behind nominee companies in that top 5.
Yeah.
But there's quite a lot of high net worth money in our company, and that's probably come in through my director Les Ingraham, who's nursed the company through until I joined in 2014, where he was strongly supported by people around him, and he kept the company going, kept the company on its feet, put a lot of his own money in, and put a lot of his high net worth friends' money in. So that's where we've got to today. But that shift of bringing the project to a new level is one of the changes we're looking to make in the share registry.
Right, but I'm going to come back to overhead again, because again the conversations we're having with a lot of juniors at the moment is there's a lot of disgruntled investors out there. They're looking at the salaries, they're looking at the overheads, the way that money is spent, and it's all public information. I get, but very few people look at it. But when they do, they're stunned. Mining executives are extremely well remunerated.
Oh, that's very punch of you.
Right.
Look, I think that I certainly can look at what we do, and I don't turn up on the top 200 list, so I'm okay. But I think junior resource company CEOs, it's quite a pointy thing, and I think I'll have a lot of support out there from them. We're doing something that other people are not doing. We're having a crack at something that is almost impossible to do. We're trying to if you're in the discovery zone, you're trying to find something that is unfindable. You're trying to then turn that into a resource. 1 in 100, 1 in 1,000 will make it to that next level. You're trying to turn that resource into a proper feasibility study. So I think we're out there on the risk margin taking chances, and when we pull that off, our shareholders often benefit significantly.
Yeah, but you're taking those chances with someone else's money, right? And they expect you to behave a certain way. Not you. One a certain way, and when people are taking not a lot of that risk on their own shoulders, and by that I mean taking big salary, not necessarily aligning themselves with shareholders, and taking a smaller salary with more equity in the shape of shares. I can see why that's sticking the throat.
No, of course I can see that as well. But there's a balance in there for everybody, and I think the best way that I see that in the junior company sector is for they're not to be so pointy at the CEO end. I think a lot of junior companies are CEO heavy.
I agree.
And they would be far better serviced by having a team at the top.
I agree.
A technical team where those top players are equally remunerated, and they all focused on the core objectives of the company. So, for example, in our case, with Todd, we just put Todd Richardson on our board, on our executive team as COO. He's come in with a very specific objective of delivering that project and the approvals that go with it at the technical level with his team in budget and on time. So that's his role. My role is to make sure that he has the funds to achieve that. So that's my role. But we're equals in every other way, and that's a really important part of that structure. I don't feel that if I go out of the office like I am now, that the ship's listing at the back. It's very much under control. Right. And the project's definitely working.
But in terms of the weighting, in terms of how you guys remunerate yourselves, are you more incentivized against deliverables, against share price, against those sorts of things, or is it all front loaded?
No. It's at this stage, Todd's got some shares when he came in. I've got some performance shares given to me on the way in when we delivered some of our resources. We have now reached a point at the end of the PFS where we have to lock in some new remuneration for us on the incentive side. But at the same time, you've got that shareholder view that you don't want to do that too early for the wrong reasons either. So it's definitely on our cards to do so. Yeah. We haven't locked it in. And you want to do that with the blessing, if you like, of the shareholders as well.
Absolutely.
And in the Australian market and any market probably as a public company, you do have to go to shareholders with those direct remuneration opportunities. Right. And they have to approve. So we definitely understand that. I don't think that in our company we're over the top. I've definitely seen a lot worse. I've seen much worse. But I think my most important thing about that is that the executive team has got a load that it can deliver the projects, and that is strategically split across key members, and that I think we've got a very good structure in place in our company.
Okay, so like I say, I always advise people to take a look at this prospectus and actually understand what they're getting into. Absolutely. And if people, the management team, look like they're keen to get as much money out as possible, as soon as possible, then it's something that you should maybe think about twice. But you guys have looked very reasonable.
Yeah, public
Okay.
company. Read
Yeah.
I'd say it's a good lesson for anybody from a
Mm.
due diligence point of view.
Yeah.
We that I do it, you do it. Investors should read the accounts. They
Yeah.
should read them from cover to cover
Yeah.
and read the notes. That's
Yeah.
That's the way I was taught.
Yeah.
Before you make an investment, look at everything and then form your opinion from there. Don't just do it on the back of a tweet or a hot copper post.
True. Right, let's get on to the money side of things. Okay, you're over here having a few meetings with some institutions and others, family office as well, family offices as well.
Yes, and interviews.
And fabulous people like Crux Investor, quite right. So what are you telling them? Because when we spoke last, I was impressed by a lot of what you said. You seem to know what you need to do. But it's a big list.
Yeah.
So what I'd like to understand is what you think your 3, 4, 5 priorities are, and tell me how you're going to actually deliver those. Because if you're going to raise money, you need to be clear about that story
Absolutely.
with people. So what do you think your focus is?
Right. So just take you through a typical scenario when you're meeting with one of these guys. So really pointy meeting. So it either focuses on the market, sometimes quite heavily on what the market is like, because we've got a commodity here that when you look at the vanadium price chart, it's not a pretty thing to behold. It's very spiky. If people don't know the commodity, they want to look at why would you believe that the price over the next 10 years will be any different than it is now? So and why would it not behave as radically as it has? So a lot of time understanding what the market behavior is and what we see the forward growth is. And you have to have a view on the forward growth, not only on the price, but also on the market demand before you can even entertain looking at the project at all. So that's part of the conversation. The second part is, okay, what have you been doing to get you to this point? What have you really achieved in terms of the milestones? What makes you so confident that this is going to go ahead? So
What are they?
Well, we've started I joined 4 years ago. We've taken the company through drilling it out, pushing the resource up to 90 million tonnes in terms of our target horizon, getting that through a PFS, which allowed us to declare that maiden reserve of 18 million tonnes, which gives us an opportunity to, which looks like a first pass mine life of 18 years. Yeah. If you take that from the total remaining inferred resource, that gives you another 2 times that life, if you like, another 30 odd years of life after that, which really is something that people want to see. Is it a long life project? Yes. Does it have the grade? Yes. Then we talk about the technical side. What is the material that we found this great vanadium deposit? It's special in grade, it's special in thickness. Those are the things they want to hear. Okay, what is it like? Who's done the same thing? So then we can talk about.
Well, is it economic? I guess is where you want to get to.
Exactly. So the PFS indicated that at the price ranges we gave, which we did give a few, it's economic. Is it fantastic at today's price, which everyone will look at and go, well, it can be a lot better. What are we going to do to stay in business when we're in business? And then last thing, where are we going to get the capital?
So all great questions. Yep. So let's answer a few of them.
Okay, so those are the questions that I get,
yep.
and I'm setting about partially answering them along the way. The project itself, from a metric point of view, is very comparable to the Largo and Bushveld projects in terms of the geology. So we know we've got tonnages, we've got grades, our concentrate grades we've developed from our test work, and we'll be confirming in our pilot work, are in line with delivering a high quality concentrate. Not the best concentrate in the world, not a 3% or a 2% like Bushveld has, but certainly at that 1.4 level comfortably for the life of the project. So that's a very important cornerstone, if you like, of our delivery.
Right.
The very important under vanadium sense is that the silica grade needs to be in a very, very tight space, very, very low, and that has implications for operating costs. So you need to keep it down. We're very comfortable with what we've done so far, and we've continued to deliver more work. And again, the pilot study will confirm that we can get good value.
Was you looking at 450? Was it 450 or
415? 405.
Right, and you need to get that down to
we want it anywhere south of $4. I think you're good.
Is interesting. Okay,
that's right, because you're looking. If you think that it's to say you're looking at an operating margin of $4 on a price that's $8.60 or $8 for, even if you say in the worst scenario, for a long period of time.
Okay.
So it's the key thing in operation for us. We want to show in our study work that our operating cost can be comfortably and safely at below $4 or at $4 and below. So around that zone.
Okay.
And we've shown it in our PFS, and we'll continue to show that in the work we're doing in the DFS. That is our goal, because without that, we're not an option for people going forward.
Mm-hmm.
So we know we are.
Okay,
And we're confirming it. The work we're doing now in the pilot study, which I'll get into.
Yeah.
But the pilot study is about confirming everything and de-risking everything around the process route to give people a comfort that whether it's a bank or a small investor or an institution, that the work is being done well, is being done properly, and it reflects the feed that'll go into the mine.
And presumably some kind of strategic partner. So the institutions for sure on the money side, but that's not necessarily going to come from banks or institutions.
No.
Are you having conversations with strategics?
Yes.
Right.
So now you get to the point of the capital side. So the operating cost is part of the study work, driving that to the right level. But the key thing is then we've got a capital number that has scared some people, to be honest.
Yep.
And people look and go, oh, it's a big number. Now, you look at big projects around the world and it's not a big number compared to other projects.
Right.
But people still look at it and go, how are you going to get that money? You've got a $40 million market cap. You need to raise, somewhere along the line, you need to raise this $350 million room. Now, what we are doing in the DFS is looking at all the options we've got to reduce that capital. So by taking things, or not taking them away, but actually engineering them out, that they don't have to be there.
Right.
That's the first thing.
Okay.
And that'll allow us to optimize the capital that we need to get from a strategic investor. That will also help us with de-risking the project as well, significantly.
So I mean, that's not a new model. It's been done, but tried and tested, done before. It's a question of who you partner with, what they think of the asset that you've got. You're doing some work with the pilot plant. I can understand why they would find that particularly interesting, because it gives them a better sense of, well, definitely the economics and how hard this is going to be, right? So with those conversations, do you then sort of step back, let them come in at a project level and take over? Are you incubating this? Or do you think that actually, no, I want to bring this into production, I'll just take the money?
No, so you asked earlier, just to back to one of your questions about the key partners, who we talking to. So we've got a target space that is across, that's both incoming and outgoing, if you like, in terms of targeting. People who are in the vanadium space, either as converters or as producers across the world, and we'll include China in that mix. We obviously got one MOU in place already. They're a converter, so a converter being someone who either makes ferro from vanadium or who makes VCN from vanadium. So those are the converter space. They're a very interesting market because they have got money but they don't have feed. Then you've got the smaller steel mills in China who are probably more likely to be ones that are going to be looking at it. And then you've got...
but those conversations haven't started yet.
They
you know where to go.
There are conversations that we have, ongoing conversations under CA mainly.
Okay.
Those are not at the MOU level; they're at the data review level. So we have an active data room. We've said
so there's people maybe lots of people. You're one of them. If they like what they see, they may take it up.
It's more pointy. It's more pointy than that. It's one-on-one MOU review of data.
Okay.
We have a data room that's very active. We have a full financial model which is at close to a banking level, but not.
It's interesting to me. What I think is interesting is that a 30 million market cap company has got this full data room available because it knows now is the time to be having those conversations. Which means that your market cap, is it going to have the chance to grow, or how does it grow? Where's the value come from with a small company like this, where someone's going to come in and take a sizable piece of the action?
Well, if someone comes in and takes a portion of the project, say at the project level, let's just say hypothetically a corporate comes in and goes, okay, they like this, for whatever reason they decide, and they want to make us a proposal for a project level earn-in. That earn-in amount and their ability to go through will be at the project level, not at the shareholder level, and that'll reflect the value that we've put in the company. We would say in our presentations, in our model, that this is what we think the project's worth.
Right.
By them coming in validates that whole project for us.
But that's what I'm trying to get at. I'm trying to understand your strategy, your model. If you've got an asset, you've got one asset, right? Someone's going to come in with cash, as strategic. It's not coming in at the Australian Vanadium PLC or limited stage, they are coming in on the project level. So it doesn't affect your share price, but it doesn't also leave much room for growth, equity growth there, unless you go and do something with either the cash you may receive for their portion, if there is any. You don't have any other assets. How do you continue the growth component to your story?
Well, you asked earlier, to follow up on your other questions,
Yeah.
is do we want to stay there and do that?
Yeah.
So our team is ideally equipped to actually build this thing.
Okay.
So the value creation really sits in the team sticking around and making
So that would be the
happen.
type of conversation you want to have.
That's the conversation.
Right.
Maybe saying,
Okay.
listen, guys, you want to come in and do this,
Mm-hmm.
but we know that if you cannot find, you will not be able to find a better Vanadium team with experience than you find here, both from a consulting point of view and an internal team point of view. We know what to do here, and we know you know what we know what to do here. So we're going to go and do that. So you come in and we'll help you do it. At some point, that goes past them wanting to do it, but we're then part of the team.
Okay.
So it's adding value on our side
Right.
along the way while they help us do it.
Okay.
So that strategic investor will soften the blow, if you like, of that funding requirement, and it'll allow the companies to grow the valuation. We just have to look at the valuations of Largo and Bushveld today. $1 billion and £500 million. That's where you can head to. So if those valuations are even partially reflected in the share price of it with those partners in play.
I don't think that, you've got to do peer analysis at this level. It's nice to say we're like Bushveld, but you are where you are, right?
We want to be like Bushveld.
Yeah, and you want to be
fair.
like Bushveld,
Yeah.
right? But we've got to talk about where you are today. And what I'm trying to get out of you is, how do you move from 30 million market cap to 100 million to 300 million? What are those steps that you're going to take, apart from the vanadium price going through the roof?
No, of course. I'm not relying on that, because that's not a thing you can or should rely on. You've got to believe that the demand is there, so that when you're in production, you can sell it into the market.
So give me those steps then.
So we're right at the point where our workflow really is cut out for us over the next 6 months.
You know what you're doing, okay.
So each of those workflow items are about value, convincing everyone around us that we have each of those milestones ticked off and are moving towards production.
So they are: one, get the DFS complete.
Absolutely.
Get a strategic on board.
Right.
Okay, with the prerequisite cash to do so. Then what?
Get our environmental approvals in order and on the table and done.
Right.
Decide on how the actual final layout of that plant looks, and then start to work on who our vendors are and how we're going to deliver it. So get down to the dirty part of the engineering as soon as possible.
Yeah.
But the environmental approval for us is always going to be a critical path item. So as much work we do on the technical side, de-risking technically is very key for us. Our pilot study is a central part of our work. It precedes the DFS engineering component and the feed study component, and it's something we're doing now. We're doing it in quite an aggressive, big way. Just to touch on that point, that will be the thing that defines what the circuit looks like and what the engineering will be, how much it's going to cost us to build that. So we have to do it properly and do it well. So that is a body of work. But the environmental approval running alongside that is a time critical issue. You might have seen we put out an announcement last week. We signed an MOU with our neighbours West Gold. They're a pretty big fish in our area in terms of gold production. They're sitting with a lot of water in their pits. Us being able to access their water for our mining operation for the long duration significantly de-risks our water supply, and also it significantly de-risks our environmental approval process, because we're not risking any access to a deep aquifer and all the Australian issues around these stygofauna, troglofauna issues. We're trying to avoid that, because that is a red flag to them, and if we don't have to go there, it's great. So active things like the MOU with West Gold is a really positive step for us, and we have to put those milestones on the table aggressively. But the pilot and the DFS that follow it are really most important. Those are where the value add comes in, because we can do those two things I mentioned earlier. We can lock in plus or minus 15% the operating cost that we expect, and we can lock in our best shot at the capital reduction. What can we make that? Because those are the two things that are going to make us the money.
That's what I wanted to hear. So in a year's time, looking back, you'll have done all of those things. What else will you have done?
By the end of next year, we'll have moved through the DFS and started what's called a feed study, a front-end engineering design. that starts to count how many rivets and pop rivets and pipes and everything that you need to have in the project. That's really an important part because it finalises down to plus or minus and getting people involved on the engineering EPCM side.
Right. So 18 months plus a little bit, you're in production.
That's right.
Okay. So that's quite exciting. People sort of know where they are. Let's see what happens in the vanadium market between now and then. Something you mentioned last time, which might smooth out the spikiness of vanadium as it currently is. I know you hope it doesn't remain spiky. Was the vanadium redox flow batteries?
Yes.
As a market, we know that we know about the steel, rebar, etc. But this battery market. Everyone's excited about it, but it's a nascent industry. It's early days. You're all learning. Give us an update about what you were doing. You mentioned a few things to me last time, but what's happened since?
Why am I here? I'm in London, but I'm on my way to France to the International Flow Battery Forum.
Right.
That's a collection of flow battery scientists and companies that are involved in that space. Obviously, because of the development of flow, of vanadium flow
Remind people, these are large, long life storage of energy, which is different from lithium, which is a shorter life type battery. Okay.
They're a large scale stationary energy storage battery, not for EV market. Yeah. But they're ideal for true load shifting, and where they come into their own is when we're applying lots of renewables to a grid, we need to really learn on a global level how we're going to shift our energy that we capture from our renewables and use it at other times of the day. So the flow battery's sweet spot is around 4 hours to 8 hours. So that's a difference from the high punchy energy that we get out.
But these things begin because the electrolytes, kind of liquid, they're thinking they can build these things larger and larger and larger.
They're infinitely
scalable and reusable.
Yes,
which is very, very interesting.
And they use a lot of vanadium.
Yeah, so vanadium companies, you should, if you're watching this, should also consider them as a battery company going forward. But early days, you're all learning. So what's happening at this conference in France?
So the Flow Battery Forum has been running for about 9 years, I believe. And traditionally,
why is it only now that people are sort of taking notice of this?
I think if you look back to the history of lithium ion, you would have found that they had probably a few years of conferences before they took off. So a group of electrochemical engineers mainly, lots of PhD theses and proposals from, but almost all of it centered around the benefit around vanadium, because vanadium is the core of the flow industry. So all of us, we get together, but Vanatech, which is a body that ourselves, Bushveld, Largo, belong to, and we have an active promotion effort within Vanatech that is centered around the development of the flow battery market. We call it the Vanadium Energy Storage, the subcommittee.
Right.
It's a subcommittee on energy applications of vanadium.
And who are you promoting this to?
And we promote this to the flow battery companies.
Right.
Principally because they're the ones who will be buying our vanadium to put in their batteries, or they'll require vanadium for their batteries to run. So they're if you like, our key future customer.
They are, and that works a couple of different ways. Okay, so again, vanadium companies, you should also think of them as battery companies. Some are going to be fully or vertically integrated, some are not. Depends on capital constraints, I guess, and skill sets in-house. I know we've had a conversation with one of the larger players, and they're going to be vertically integrated, they hope. The reality is, for smaller companies like you, surely that's too early to be thinking about, but I know you're spending a lot of time learning about. But where do you hope that goes?
I think as a collective, we need to create a market. So that's why, as a group, we've decided to use the Vanatech marketing platform to promote the use of vanadium flow batteries globally. We do it via aggressive work on Twitter, on social media, by telling people what these batteries are, how they work, where they go, what they do, and how much vanadium they use. So, but with the flow battery companies, they need to be educated about us as potential producers. What do we need to talk to each other and say, well, what do I need to do today that I can produce a product that you can use in your battery? If your battery is different from your friend's battery, what is the difference in the recipe that I have to give you versus giving him? And do you want to come to me with a long-term agreement to buy vanadium from me? That validates my new market, and also lets me, you say too early, it is not too early to do that, in the sense that if I do it today, It validates my reason for incorporating it in my design, incorporating it in my planning, incorporating in my offtake agreements that I'm trying to get.
Which you hope you'll get some value attributed
absolutely.
to.
And we've seen that that's worked. One of our best early moves in the space was when Gildemeister Energy Storage, now Cellcube, out of Austria, we signed a sales deal with them where we were their agent in Australia. That got us a massive. We probably got $4 or $5 million on our market cap just for doing that a few years ago.
That's interesting.
And that, so there's a lot of value attributed to that. I saw an article about Bushveld the other day, and there was a value attribute put on the value of Bushveld Energy inside Bushveld's market cap. So that's a very interesting concept, that there's actually a value of this energy component in what we do.
Yeah.
But we as vanadium companies need to create a market here, and we need to know exactly what that market is, if it's real, and what the requirements are of the products we need to produce for it. Specification, for example. So they'll need a 99.4 or a 99.6 with none of this and none of that. Minor element chemistries are really important. So we have to do some work on that. We can't just take it out of our plan and there it is. It's something you have to plan for. Yeah. But it's really important, because if you have a market like this, it's worth 1 or 2 additional mines at our minimum projection of new production. Okay. And that's really, again, gives us a differentiation between steel and another market, which at the moment, the vanadium market, spiky as it is driven by the steel market. We need to diversify away from that.
I get it. And so if that's the market as a whole, you're going to follow the crowd, sort of see what happens, make your mind up at some future point. Could you, for me, because I think I've been maybe describing your company and I shouldn't be, how are you describing your company? You know, you've got a big asset, potentially, what do you say, 5% of the world's vanadium supply, potentially, right? Depending on what happens between now and then. How are you positioning yourselves? World-class potential operator? You're somewhere in the middle. You're, you know, how do you view yourself in the marketplace? That all these people that you're, you know.
Well, some of those words, as you know, because you've heard them all before, I hear it in
your voice. They've
been used very often, right? So I think you got to look at being able to show what is the asset different from other assets. So in this case, I do believe it has unique characteristics. It's not totally unique, but it is a valid asset to take down this price. The only way for me to validate that the best way is to compare it to operating peers. Those are the peers that I look at. Look at their metrics. Can I match their metrics? Right. And the only way I can do this is match that in my study work. Okay. And I believe I can do that. Okay. So that's for me how I validate that exists. Are we good enough? Basically, are we good enough to be in production? And the answer to that, in my view, is yes, and I'm projecting that. Right. Because I can lift the skirt, if you like, and go, it's there. Have a look.
So you've got the scale, haven't got the grades. You're okay, but you're not. You're not, let's say, 2-3%, as you said earlier. So that you've got to work on the economics in other ways. You talked about innovating and pelletization, etc. last time to me, which I'm a buyer of. So tell me, the second question I want to ask is, so if that's how you want to characterize your company, how do you characterize your ability to your investors to deliver this in the next 6 months and the next 18 months?
Yeah, so I've got to go on my skill set. Yeah. And my skill set is being able to sit here and talk to you and get some sort of message across. Being able to work and build a team around the right people to get the job done. So my own experience being resource based and having a corporate history of some sort enables me to be here. But it's all about building a team that is able to deliver. And at any stage, I do believe we've already got the core of that team in place with the vanadium experience, which is a standout. So where that goes, who's in the team, as long as the right people are on the bus, it's great. You've got to have the right people on the bus to get the job done. We mentioned the leadership of a company of this size really needs to be focused on people doing the job they need to do and being empowered to do so at the right level. So we think we've got a good structure in place. Daniel Harris, which we've talked about before, Daniel's got over 40 years of experience in the vanadium space. But more importantly, as a corporate guy, he's been in a lot of corporate situations. So he's able to give us the guidance as a mentor, as well as a director, that we structure ourselves properly and that the right people are doing the right things at the right time. Is me being in London this week the right thing? Yes, it is, because I'm advancing the cause of funding. Is Todd doing the right thing being back working on the pilot study? Absolutely. He's advancing the project. Those are the right things to be doing. So it is a totally team structure thing. And I have a view that trying to keep ego out of the structure of a junior company is absolutely essential. And the easiest way to remove ego from the project problem is to share the load at the top.
Yeah.
And if you do that, you've got less likely of having a myopic answer or an egotistical answer, which the ore body will always beat you on.
It will. It will. Thank you very much for that update. I really enjoyed that. Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.